Welcome to readtheticket.com. Gann angles are time versus price. The question is time. Should you use trading days or calendar days? The answer is based around the law of vibration. The law of vibration states all stocks and commodities have their own personal vibration. What works for another may not work for the other. Gann used angles of 1 by 2, 1 by 1 and 2 by 1 mostly to monitor the vibration of a stock or commodity. The answer is to work with the time factor that fits the vibration best. Weekly and monthly time frames are not an issue because there's always 12 months in a year and 52 weeks in a year. Trading days and calendar days differ depending on the count. You can have 260 one year, 259 trading days. Calendar days is 365 every year. So let's have a look. Using Apple Inc, I've drawn off pivots on the price chart that are just prior to an impulse wave. Two sets of Gann angles. Pivots that are prior an impulse wave are very important. First one we have is calendar, and as you can see, the red line is the 1-to-1. It maps to price very well. Here's the pivot, and here's the impulse wave. Here's a pivot, there's the impulse wave, and as you can see, the major correction just hit the 1 by 1 and fell and broke through. In the trading days, the major pivot, price goes up the 1 by 2s is 1 unit at a time to 2 units of price. 1 by 1 is not dominant as it is up here. But on the way down, you've got the 2 units of price to 1 unit at a time. It's the 1 by 2, and the 1 by 1 once again doesn't fit. So I would suggest the vibration for Apple suits the calendar Gann angles best. Another chart like Google or GE may find that trading days are best. So let's have a closer look. Here is Apple calendar. So I'm going to select the pivot that started the rally, the last pivot before the big impulse wave. So here we are down here. This is the pivot prior to the impulse wave of the long trend. Just a rough selection. As you can see, the Gann angle, which is the 1 by 2, 1 unit at a time to 2 units of price, holds the impulse wave very well. And it pulls back and comes down to the 1 by 4 and holds that very well. And I showed you in the demonstration prior, it fits quite well. As you can see, it broke the 1 by 1 and it's holding off to the 1 by 2. Okay, so let's have a look at that. Okay, so now we can go back to the trading days. Now obviously with trading days there's less bars per year, so it's a tighter chart. Because we only got 250 to 260. Trading days is simply the days in which the stock was traded. It does not include weekends and does not include holidays like Martin Luther King Day and President Day or what have you. Whereas the calendar days, if a holiday was on a Monday, the price that was closed on the Friday is pushed into the Saturday, Sunday and Monday. So the calendar days is populated with price data immediately prior to it. So let's have a look. Take the last pivot before the impulse wave. Well, it's a bit off. Blue screen. To get around this blue screen, just click the side to remove the select function. Let's see if I get a bit closer. Alright. Yeah, well here this Gann angle holds that price action okay. But as you can see, the wider trend is not followed up. Maybe we see another one. Yep, that's okay, but not perfect. The calendar days suited it best. The Gann angles can work from a trend following type aspect where you select the pivot and price actually stays above the trend. For example, here we want price to stay above the blue line for a trend a continuation, or you can use Gann angles for a top determination. So say for example you got here's a small pivot here. We'll choose this one because I've tested this one. This is a small pivot, but it's not significant. We might select that, and we got yeah, we got this is a small pivot. Price is here. We see how it picks the two tops. Now that pivot is not significant, as I'm sure it's the pivot just below the plunge, but the price action follows up to this Gann angle and fails. Now, how you would select that on one Gann angle alone is not enough. You'd have to have a cycle peak to also take a short there. And the same as for that one there. You can select. Here's another pivot. So there, that's interesting. So Gann angles can be trend continuation or peak or trough determination. So which one do you choose? Well, it really depends, like I said before, on the nature of the chart. You could use both if you've got that time to look at both. It just takes this here, for example, this is a bottom pivot, and it fits to the bottoms of these lows pretty good. But you would never actually trade off that point there alone on the Gann angle. You would need something else like a cycle bottom or some other material fact to show that it was just more than a freak luck. Let's go back to calendar days and try that test. Okay, calendar days. Well, we've determined that the trend continuation use of Gann angles works out very well. We haven't got that pivot shown, but we'll choose this one here. Nothing there. We might go up a channel bit and choose this one. Yeah, okay, so that captures a few tops there. Like I said before, you need some cycles to come in to prove that was working. Yeah, this the last pivot before the impulse wave. You see that angle takes a few. Well, that's a continuation angle. Oh, I didn't notice that before. We've got two tops here. Caught by the angle, by the 1x2. Oh, so that works. Okay, so let's have a look at this one here. Bearish Gann angle. Yeah, not a perfect fit. Maybe if you take that one there, what happens there? No. Nope. Yeah, that's alright. So you can draw. I mean, obviously, you get the impression you draw Gann angles everywhere. So something's going to hit. Gann angles alone are not enough. You need a cycle peak or trough to coincide with the price action hitting the angle to confirm that you might have a turn on. For example, here you had an impulse wave up, peak down, it comes down here. That would probably have to be a cycle bottom, and then for a buy. But that's definitely a one-to-one trend line based on calendar. That works out pretty good. What's this one here? Yep. Gann always stated that when price action broke the one-to-one, it could be a serious trend change. As you can see here on the one-to-one on that. Pretty serious trend change when that happened. And we get a bit of a trend change here. So it's obviously back here. Never really sort of, wait a minute, get a better selection. Okay, so there's the test there. Broke the one-to-one, came down to the 2x1 and it bounced off and held that all the way up. How accurate is it? I'll just get a bit closer. Come here. Right, that's better. You see how there, pretty much hugged the 2x1 all the way up, failed the one-to-one, test, carried on. Now, I mean, the tool I'm using to draw the Gann angles is basically a quick draw tool. We have the ability to save Gann angles on the chart with our object saver. We just use the quick draw to go fishing to see how it looks before we actually start saving things. So that's the use between Gann angles on trading or calendar days. The law of vibration Basically says every stock or commodity is different. Find the use the trading or calendar days that suits the price action best. You have to do your own tests. Thanks for watching.